Alrighty, YouTube, good morning as well. I hope each and every one of you are having a wonderful day. Creedmoor here with the Bullish Bears. Everyone here in the Discord as well, good morning to you. I hope you are doing well. We're going to go ahead and do some analysis. If you tuned in for the show yesterday, I know it was late. I do apologize on that, but we did do a quick discussion on the ES and the current trend we're seeing in the ES, and I had dictated that if we had good news and broke out, we'd be looking at these upper levels. But in contrarian, what would we be seeing? A regression back into the channel. And we can see exactly what happened. Price came through. They just couldn't break up high enough. And where'd they come? Right down to our 50% zone here in the channel. That is something when you're working a mean reversion strategy, which have been very prolific right now within the market as a strong, consistent strategy, something to keep in mind. The thing you have to identify is what is your mean for the market, be it a VWAP, be it a central Keltner, be it a Bollinger, be it a 50% zone within the market. So just keep that in mind. We did have a heavy amount of news, and we do have more news to follow within the market. So real quick on this, for those unaware, you can use several different platforms to find your news. I tend to utilize the calendar system off of TradingView for just my broad economic data, and then I have my specific stuff as well on the other side. But if you're wanting a dual system that is not going to cost you an arm and a leg, use the one on TradingView and then set up a proper tweet flow over on X. That is something you can do. And as I was saying, why the heck would I want to do that? Wall Street isn't using that. Actually, Wall Street is used TweetDeck and X Pro to keep everything together. Sadly, Twitter is, or not sadly, but thankfully, Twitter is almost as fast as institutional stuff, and there's enough institutional people on there that they tend to comment it out much quicker than you would actually see on a lot of professional news feeds, which has always surprised me. But hey, the nature of the world, things change, data changes. So looking here, we can see that the data itself is not great, but it is not horrible either. We're seeing here growth slightly down, GDP sales slightly down, PCE slightly down, above forecast, but still slightly down on there from previous. And this is just a bit of a contraction overall. Now, EIA crude is coming at 10.30, so that will affect our oil side of things. That will also affect primarily the SPY when things are coming through. So if you're trading ES futures or if you're trading the SPY, do keep in mind 10:30 oil report is going to be very impactful. Now, moving ourselves down, we do have the Fed speaking about every 15 minutes here at noon Eastern time. And then after that, things chill out for a bit until we get into the evening session. So if you're trading FX in the evening session, do keep in mind we got a little bit of stuff coming out. But that's beyond the scope of what we're discussing now. Alrighty, so let's go ahead and take a look at the day. Do keep in mind that for the people on YouTube, I'm not watching the YouTube chat. The only way I'm going to see your commentary and as you ask questions is going to be if you hop in the description and come hang out with us on the Discord here. But those in the Discord, you know as well, you are more than welcome to unmute and ask questions as you see fit, or type them in the main chat, and I keep my eyes over on the main chat in the Discord there for any questions that are coming through. All right. Let's do some analysis here on the ES. Again, if you are trading the SPY, this is going to be relevant for you as well. So let's go ahead and do a top-down approach. I'm going to remove everything to make it nice and clean for us. We can see a nice gap has set up right through here. We can see we're setting up with a move up and then a flag scenario. We are divorced from our 21 slightly in here. We are looking at prior day's action. So this was our previous day high, previous day low. And we want to keep an eye on these areas for sweeps. Now, our previous week range on this high up here, 51.23. There we go. Get that nice and level. And then our low was, yeah, because we had a short week, right here on Wednesday. Okay, go ahead and start marking those out. Previous week at low. Previous week high. Previous day high. Previous day low. Awesome. So this lets us know our range. We do have a natural ATR on the ES, about 48.5 points on there for the session. So do keep that in mind. We're not going to be looking for any 150, 200 point moves. We're going to be keeping within that idea right there, that 48 points. Dropping down to the hourly here. Going ahead and marking out our previous sessions. We can see internally here the tight channel that is set up. We're looking for that price action to make its way back up. Go ahead and draw that out. I'm going to move that down slightly. So we see most of the price action is right here. And the most impactful. So let me, yep, right off of that. That channel high would be right there. And we can see how price action has been affected right on that 50. See the 21 at that 50 on an hourly time frame. One could warrant the idea. We've come down, we've swept these lows, we're pushing up here. We did have a relatively decent day yesterday and closed higher on that. Now it is Wednesday, we are expecting some compression on things and news is not the best. So I would not be surprised if we actually sell off for the morning. So what would my strategy look like for that? That'll be my thesis for you, YouTube. If you want to see the rest of the trading we're looking at, you will have to hop over to the Discord. So if we have a short position on this, I want to see us pierce these lows right here. Okay, this low right in here. So the way that would look is my risk would be the 50% zone. My entry would be a pierce of that low right in there. And then I'm looking for a 2 zone. Now to make sure that my 2 zone is relevant, again, we always take profits and we always have stops at key areas. We do not just want them out in no man's land. So let's see if there's anything to the left in this 2 zone that would dictate a reason for us to either take profit sooner or even later. Right here. So we can see that before on the run up, this was a relative zone. So we can draw this again. We can see the main bodies. We can see the wicks right in here. I'm going to go off the top of those bodies for that channel. We're going to look how far in. So if we were to enter exactly on the low, on the break of that low, and take profit at the top of that channel with the same risk, the 50% risk, we're looking at call it a 1 to 7 on there. Now, if you feel that your initial risk needs to be a little bit lower, then yes, right in here, keep it on that 21 as it's moving through. Again, with the NQ, we can see a natural, with the ES, we can see a natural 1 hour ATR of 7 points. So this is 2 ATRs of risk on this, which is, which is good. Two ATRs of risk is fine on that. That's a good area. And for those a little confused, that means that it would revert by an average of 2. So if you're looking for it to go south and it reverts by 2 times on average against you, the idea is wrong. It is what it is. You have to understand that that's part of the metrics of trading. So that would be the bearish idea. The bullish idea on this would be a ride the 21 up to this ceiling here. Okay, that would be the extreme that I would be working with, and have a trailing stop behind this. So I would look to get long right here. Initial trailing stop is going to be the candle before the break. Okay, so if we have the candle break here, we got the full candle. My stop initially is there, and then a trailing stop on this until we hit that high, till we hit that extreme. Now, if we are looking for a sweep of the low and then a move higher because of a break of the previous day high, and we want to take it long, once again, our stop 50% level, we see our previous week high up here. Our 2 zone is going to be right before that high. So is it valid to say that on the break of this area, for those that are optimistic on the continual push, then your stop is set there at the 50% area. You make that move. For those that need a little bit more confirmation, you'd be looking for a breakout, a retest of the area, and then a push. And then what I will say is the level 1 entry for this would be once it breaks. So if you're just getting into trading, you're just learning how to run those areas, that is where you want to go. The professional aspect would be on the breakout retest, and the professional, a little bit of gamble on top of it, is right as it breaks out, and then you add more as it comes in. Okay, so that's how that bullish strategy would work. Let me clear all that off real quick. So that is the bullish and bearish thesis on this, and that's with the current market information that we have. That's off of an hourly time frame for the macro analysis. And we jump down to a 5 or a 15, whichever works best for you. And we can see the zones that we've set out. We see that to clear and get back to our 50% area, we do have some liquidity we need to pierce. So for those that are looking for a very quick scalp in the futures and on the SPY as well, as you see the market pierce this flat top right here, this roughly 50.76 plus or minus 2 ticks right in here, as you see that pierce, that's when it will make its way up. Okay, it's going to blow through these highs here. It'll make its way up. Now on the downtrend, you can see we had a very nice 5-minute consolidation box right here. We've had our move up, consolidation, and then it fell through. So I'm not looking for a buy model just yet on anything. I'm looking for us to get some initial bullish pressure and then for us to sell back in, but I will be keeping a close eye as the market itself opens up and we get that new flow in. Looking quickly over here at the book map, and then YouTube, I'm going to cut you guys off here in about 30 seconds, but looking here at the flow on the NQ, you can see we have a nice floor at 910, so we break a 910, we waterfall through. We can see here previous resisting structure at 9.4, looking to see how we break through that on the ES from the levels we marked out. You can see market's open here. Little bit of buying, a little bit of selling coming through. We can see right here, liquidity zone, liquidity, and liquidity zone right through there. So I love it. All right, YouTube, I'm going to cut you guys off. Make sure to check out the description below. Come hang out with us in the chat if you have any questions, and to see all of the awesome content that we have, www.bullishbears.com. And then come hang out in the Discord. We've got a whole bunch of knowledgeable people in there. Signet, myself, Kevin, we got Jeremy. We got a lot of people in here whose primary interest is to help you grow as an individual. So great stuff. Alrighty, with that being said, YouTube, we will see.